Welcome back to Real Estate Social Club, where we bring real conversations with experts in real estate, insurance, lending, and everything in between. My name is Maylai Tracian, and I'm your mortgage expert here. We're diving into home ownership, home insurance. So before we dive in today, do me a favor, like, subscribe so you don't miss any future episodes, and drop a comment if there's something that you want to see in the future. Today's guest is Gus Raith. He's doing a lot of great things in helping homeowners get the proper insurance. So, you know what? How about Gus? You introduce yourself and just let us know a little how you got into insurance and
Yeah, thanks so much for having me, Tracy. Pleasure to be here. My name is Gus Raith. I'm an insurance broker here on the Side of Chicago. I was born and raised here and have a ton of family here. So after college, moved right back here. I went to school in upstate New York, and then never thought about moving to New York City. It was always coming back here in Chicago. And I got into the insurance industry right out of college. So it's the only thing I've known in my professional career. And so I worked at a big insurance agency for a couple of years, really liked it, but decided to start my own agency with a couple of partners, Corners Insurance Agency. And that name is a nod to a certain intersection in Chicago. So kind of a localized name, but we do insurance all over the Midwest.
oh, that's great. Thank you so much for joining us. And, we're excited to hear about insights in the home insurance world. So let's get right into it. So, why are homeowners getting hit with insurance hike that feel like huge increases in rent? What do you think is driving those premiums?
Yeah. So there are many factors to the, increased home insurance premiums, but the main driver has been materials cost and labor cost. And we got hit by two huge external factors to contribute to those things. We had COVID in
Mhm.
2020, which we had those supply chain shortages, and that made materials, especially lumber, way more expensive. Materials costs in general are still up 40% from where they were before the pandemic. And then we also just had inflation. We had starting in 2021, I think, we had this huge inflationary period that we're probably still in. So both of those factors are contributing to these huge costs for an insurance company to repair your home and pay the builders who are going to repair your home. So you had the inflation kind of throw oil on the fire of the materials cost crisis. And those two are the real big factors. We have weather events and stuff like that, but the materials cost is the main driver in my opinion.
I think that's a really insightful point. And, from a consumer, right, we as homeowners or renters, we just see the rising costs and that's hard, right? It's definitely different times now with inflation and how you speak about those two factors. Insurers are also kind of pulling out in certain states like California, Florida. Do you think it's a business decision, or industry crisis? What do you think? Pull back the curtain and kind of just give us a little insight on your perspective.
Yeah, for sure. I mean, it is a business decision at the end of the day. Those states, we have California and Florida are two that we talk about all the time. They're dealing with really unique and catastrophic weather risks. In Florida, you've got your hurricanes and flooding. In California, you have wildfires. In Hawaii as well, seeing major wildfire losses. So when
Mhm.
these kind of events keep happening, the insurers are going to pull back. They'll try to raise their prices, but sometimes they will just remove themselves from that market entirely because it's so hard for them to, adequately price that risk.
Mhm.
And it's really hard to understand. It's really frustrating when you can't find home insurance as a typical home
Oh,
buyer in California. But at the end of the day, these insurance companies are not charities. They cannot do business unless it's profitable for them. So when it gets so bad, like it has in a few of these states, they will just pull out and try to go, let's say, well, they'll try to increase their share of Midwest homes or Northeast homes because the Florida or California market is just hurting them so bad, hurting their bottom line so bad. And it's weird to defend these insurance companies. These are huge companies and they'll
mhm.
say, we lost so many $1 billion over the last couple of years. And so it's kind of a balance between, I don't work for an insurance company. I work for my clients. So I can kind of have that balancing role of trying to explain what's going on and why it's so tough out there, but at the same time, not make excuses for them either.
This is a good segue to ask, what advice do you give someone that's a homeowner that received a letter in the mail that said, hey, their insurance company is no longer providing services to that state? What action items do you recommend for these people to go find new insurance? What do you recommend to them?
Yeah, that's super frustrating as well, especially if you've been with a company for 30 years and then all of a
Mhm.
sudden they're done. My number one piece of advice, not to plug myself too directly, but would be to reach out to a broker, because even in the admitted insurance market, and I can explain what that means, pardon the jargon, but even if one company is saying we're not going to insure your home anymore, there are many others that are working in your state. So your broker has access to all of them, to shop all of them at one time. It's a difficult market, but when you're able to be nimble and switch over to a different company that does have a good appetite for the house on your block, that's the way you can kind of figure out a way to navigate this crazy market.
So that's a really good, strong point. And if you are that homeowner searching for a broker, what steps do you think they would need to do to find one? Like, there
Yeah.
may be 60-year-olds, in your home, wherever that might be, and you're like, oh well, how do I do that? And they might not even know what a broker is.
Yeah, no, for sure. So the first place I'd go is your mortgage lender. I work with new home buyers all the time, and that's where a lot of my business comes from. And, you know, 10 years ago or 5 years ago, your mortgage lender might have said, hey, who's
Mhm.
your car insurance with? Allstate, State Farm. Oh, that's great. Just head over there and grab a quote. Today, it's just very difficult. So, that company, whoever it is, might not have the best appetite for your home. Odds are they won't. You can search online for an insurance broker. Another keyword is independent agent. What an independent agent is someone who does not work for one single company. They can sell multiple companies. So, if you're a realtor, you're not just going to show your client one home and say, let's just try to make this work. Well, you're going to show them a dozen homes or more to find the right fit.
That makes perfect sense. And I also help my clients find insurance agents that can help them. So I do help a lot of my clients as well that way. But yeah, great tips. I wanted to ask you, you're in the insurance business, but what is it that motivates you and drives you to do what you do?
Mhm. For sure, yeah. Insurance is not sexy. It's not exciting to most people. It's exciting for me a lot of time, but I work with, I'd say about 90% of my clients are home buyers, and a huge majority of those are new home buyers. So
Mhm.
that's super rewarding. I'm sure you'd agree with this, to be a part of that huge milestone in their life. It's the biggest purchase they'll ever make or they have ever made in their life. So I'm not popping champagne on every deal like a realtor would, but I'm usually the last step in that home buying
Yeah.
process. You have your inspection, or you get your loan secured. Insurance is often that last step, and I can say you are cleared to close. You're good to go. Good luck with the move. And so that is just those little moments each day are super rewarding.
Have to agree with you. I really feel the same way. And just being part of that milestone in their life, it's an awesome feeling, and guiding them to kind of find what's best for them. Similar to you, I work for my client. Even
Yeah,
though I hang my license at a certain, brokerage, I am driven for my clients and what's best for them. So yeah, you and I have something in common, Gus.
awesome.
Cool, that was great. That was great.
Yeah,
Um,
and so y-
Walk us through a story that you experienced firsthand with a client. It could be something that was horrible, horrible situation, uh, you know, or, something positive.
Yeah, for sure. So there are tons of, not every claim story is super dramatic. There are tons of little things you see, like, helping someone out on their first home purchase and saving someone a bunch of money, like cutting their insurance bill in half is always super fun. And then on the
Awesome.
negative side, when I had this client a few weeks ago who had a water claim in their basement. It happens a lot in Chicago. The whole basement gets flooded. And this was pretty soon after we had done the policy. And I remember talking with him about this specific water coverage called water backup, which you need in Chicago. It's super expensive. And so it's always a point of conversation when I'm walking through my client's new policy. And we were just talking through it like, I highly recommend this. It's a couple $100 extra every year. 2 months later, he calls me and said that exact thing happened. That claim was paid out and it was pretty seamless. So that, it's not something super morbid like having someone's house burned down, but those little victories are great. And you can see, where what I've done, my consultative approach, taking that extra time to work with the client, was super worth it for that.
And when you mention about this specific claim in
hmm
Chicago, you said it happens often. What
hmm
what does that cost for that additional coverage?
Yeah. So this specific coverage is called water backup. If I could back up a second, no pun intended, but the water damage isn't always covered by insurance. So the typical kind of water damage you see, like a leaking roof or a burst pipe, that would typically be covered. There's a certain kind of water damage where the water is backing up due to a sump pump failure, or it's just backing up out of your shower drain. That specific water damage is not normally covered. So you have to add on this additional coverage called water backup, and insurance makes you pay a lot for it. It's like $200 a year for only $10,000 in coverage. Where if you have a condo and your entire policy is $1,000 a year, $200 of that is just this water backup coverage. It's a lot. So a lot of times you have to, kind of convince your clients to go with that. And obviously, most people don't have a claim. Most people are not going to have an issue with this. But for the percentage that do, it's a lifesaver.
That's a good one. Plus, top 3 tricks how homeowners can cut insurance costs. Give us some good juicy detail.
Yeah. Yeah, for sure. Top three, I'd say customizing your coverage, not paying for stuff you do not need. Number two would be your deductible. That's the biggest lever we can pull to impact your yearly premium. And then shopping early also. Not only do you get that early shopping discount on a lot of carriers, but it gives you time to go through all of your options and make sure you get the right policy. For customizing your coverage for that, number one, when you use, this is how I work with my clients because I'm a broker. So I'm going to walk through every single coverage on that policy and say, here's your amount of coverage A, your rebuild cost for your home. Let's think about why this number is where it is. Can we lower
Mhm.
it? Do we need to raise it? So when you take the time to customize every coverage, you have the most accurate coverage for your home, and that can bring your premium down. For deductible, it's pretty clear. The higher deductible you have, the lower your annual monthly premium is going to be. So the question that you need to ask is, am I okay spending $5,000 out of pocket if I have a claim? And that's a conversation that I need to have with each and every one of my clients. And then that third tip, shopping early, I'd say shopping early is the key to unlocking those first two tips, to really think about everything, customize everything, go through all of your options, and, try to find that best policy on the market.
That's really insightful, and I couldn't agree with you more about those tips. The third one I just wanted to expand on.
Mhm.
When you say early, what does early look like in terms of how many months prior to the insurance ending?
Yeah, I would say 1 month before your closing is probably the best timeline for me. Oftentimes, it helps to do it right after you get through attorney review, which is a step in the home buying process. So that means that your inspection is done, which means you'll be able to tell me how old your roof is, whether there's been updates to the plumbing system, all that stuff. So you have your inspection done through attorney review, going, you can help me out here, but 99% of the time you're going to go through with that purchase. The deal's not going to fall through. So we can really go forward with confidence on the insurance.
Oh, that's great for someone that is purchasing a home. What
Mhm.
about others that are already in a home?
Yeah. So for people who are already in a home, you're going to get your renewal notice from your insurance company 45 days before that policy renews. So when you get that notice, you will know the price that it's going to be the following year. So I think right then is a good time to start thinking about, is this an okay renewal? Am I okay with this new price? If it's
Mhm.
only going up 1%, you might just want to stay right where you are. But once you get that renewal notice, you'll know, is it time to start shopping?
All right, let's get a little controversial. Are insurance companies in business of protection or denial?
Yeah, no, that's a great question. I'd say there's, people say there's like, or insurance companies kind of out there to deny claims. There is some truth to that. Insurance companies don't sit around scheming on how to deny claims. That would be a horrible business model for them. And, in a perfect world, they would accept every claim. You'd make your claim and they'd pay you promptly. But unfortunately, we are not in a perfect world. There's billions of dollars in insurance fraud every year. So that's why, these companies have to verify everything that you actually suffered your loss. But on denials more generally, I think most of the denials I see come down to a misunderstanding of coverage. So, sometimes there are, or every time there's thousands of pages of exclusions on your insurance policy. Your actual insurance policy is like 70 pages long. How many people actually read their entire insurance policy? Very, very few. So oftentimes someone gets their claim denied. They think they're getting screwed, but it's really just, on page 656, that wasn't covered. So like we talked about water backup, that's a certain coverage that you have to add in. Flood insurance is always a separate policy from your homeowners insurance policy. So if you have flooding, and then let's say you're in an area that doesn't typically flood, so you didn't buy flood insurance, super common. A flood does come in and then you're not covered, and you might think that's horrible, but that's just the way it is. You had to have that other policy. And then other, common exclusions like mold and mildew are it's kind of tricky. That's one area where I actually would, you can just get your 70-page policy, command F search for mold and mildew to see, because a lot of times insurance companies will say, we're only going to provide this much coverage on those two things, or they'll exclude it altogether. And then lastly, I would say negligence is, an insurance company will not cover your negligence. So a funny story, we were working with a jewelry carrier that only covers jewelry, watches, stuff like that. And this gentleman had, because been going to the beach, he buries his watch just in the sand because he's going to go swimming or something. Someone steals it. He goes to make a claim and tells his insurance company, I buried my watch in the sand just below the surface and someone stole it. And the insurance company says, yep, we're not paying you for that. That was totally your fault. So when you go to make a claim, you have to be deliberate and specific about how you're presenting what happened. Because if you go ahead and tell them, yeah, I left the burner on or something, that actually is not, that's regular negligence. So it's usually accepted. That's an okay thing to do. But if you're super negligent and you tell the insurance company exactly what you did that was really negligent, they're not going to pay your claim.
I love that perspective. It's very interesting because you never know, right? And because of insurance fraud, that's real and that's a lot of
Hmm.
money at stake. So I understand that as well from a mortgage perspective. There's a lot of mortgage fraud as well.
Hmm.
So
Hmm.
everyone needs to kind of be aware of that, especially from our point, right? We're working in these specializations and we're trying to protect our client, but we also have to be mindful of, clients do, sometimes lie, right? Let's just be honest. That's just how. Right. So when private insurers tap out, the government steps in. Are taxpayers unknowingly bailing out the industry, or is federal intervention the only way to keep people covered?
Yeah, I would say yes and yes. It's super complicated. It's not really about the government bailing out the insurance companies. It's more about them making sure people can actually get coverage where the risk is extreme, like we've talked
Mhm.
about with California or Florida. So when you have the private market pull out of an area like that and they're saying we're not going to insure these homes, in those cases the government will step in and say we're going to provide this insurance program. The coverage is not very good and it's super expensive, but it's something that you have. So in Florida, you have or this is all over the country, but especially in Florida, you have the NFIP, the National Flood Insurance Program, founded in 1968 just for this issue because people could not get private flood insurance. If you have a house where you just can't do it, like no insurance company is offering you a policy, then that's your last option.
Are insurance companies cherry picking the safe bets and dumping the high risk onto federal programs? who's really getting left behind.
Yeah, to an extent, yes, they are. When a company pulls out of a risky area like a California wildfire zone and then starts a huge marketing campaign in the Midwest, where they know that those markets are going to be more profitable for them, that's what they're doing. They're leaving this area where they're paying out too much and trying to make back some of the money somewhere else in the country. And that does leave homeowners kind of, out with you know left in the cold, and they have to go to this program that's not great on coverage and not great
Mm.
on price. And it's kind of ironic because sometimes the state regulations are actually what's making it super hard for these companies to operate in that certain
Mm.
state. And then it forced people to go to that federally backed program, which is not great. So one solution to this that I think is going to be more and more of a trend in the coming years is the excess and surplus market. We call it ES. So it's not regulated in the same way as admitted carriers are. An admitted carrier is a regular insurance company, like State Farm is in the admitted market, where ENS are non-admitted. So they can offer coverages that admitted market companies cannot. Like they can be way more flexible in what they offer. Oftentimes it is more expensive than the admitted market. And for a typical home, be more expensive 100% of the time. For that flood policy, for the house that's in the mountains that's 20 miles away from the nearest fire station, it's the one option you have where you can still get an affordable price and still get good coverage, more importantly.
Like, AI's here and it's coming into insurance fast. So is it here to help homeowners or help companies deny people faster? What are your thoughts on that?
Yeah, it's going to be a little bit of both. I think AI can speed things up a lot, faster quotes, faster claims, but it's a tool at the end of the day. I mean, it can help make decisions fairer or just give more companies more ways to question things and deny a claim. Really comes down to, who is using it and how. So I think it can definitely help the insurance companies deny more claims, but it can also help homeowners shop better.
And what's also trending that I've researched is people are asking about the fine print in a policy. So, what's one small line in the policy that could save homeowners five figures?
Yeah, for sure. So I would say check your exclusions generally, but a specific example of that is sublimits on certain types of property. So when you have your homeowner's insurance policy, you might have $200,000 in personal property coverage, and people think that's covering all their stuff. And for their furniture, for their clothing, it is covering all their stuff. But if you have your jewelry, if you have less common, but furs and firearms, silverware, those things are going to have these sublimits on them to say, we're only going to offer $1,500, let's say, for example, of jewelry protection. So someone has a $200,000 personal property limit. They think that their $5,000 of jewelry is covered. They go to
Mm.
make a claim after it's all stolen. And then they look and see you only have $1,000 of coverage. So they're totally screwed there. But that's something that you can catch early, and you can increase that sublimit with your insurance broker, or you can find a whole nother policy that just takes care of your jewelry. So that's a question I always ask. Jewelry is obviously super common. The other limits like furs are definitely less common. But yeah, you have to make sure you're going through all those limits on your policy and checking on those things.
Well, that's a good, solid point, and a lot of people don't read the fine print. So, is it a suggestion for them to, speak with their agent to kind of give them pointers? Because it's all, it's all a bunch of jargon. You know what I
Yep.
mean? At the end of the day, 70 pages policy, no one reads it, let's be honest. It's a lot of language that a common person would read and they probably wouldn't understand it. It's very complicated. So, you think an agent can walk them through pointers?
Yes, and I do not expect a typical home buyer to read their 70-page insurance policy, or if they do, understand even what's being said. And so
Mhm,
I think there's so many, other areas in that home buying process. We're going to an expert. You have your attorney, you have your
mhm,
inspector that's going to check on
mhm.
everything. The
Exactly.
insurance broker is just one more expert, one more specialist who's going to walk you
Mhm.
through everything in your policy and say, hey, listen, this is not covered. Like this is always included on insurance policies, mold, for example, or flood. So, having that person to have that, it's not a long conversation, 15 minutes to go through your policy to hit some of those key exclusions, give you
Mhm.
some of those key pointers, and that can save you thousands of dollars.
I know you spoke about saving money for homeowners, but is there any other secret insurance discounts that nobody knows about? Smart tech, home upgrades. What are your thoughts?
Yeah, yeah, I'd say all of those discounts are real, and having your security system is huge, having a sump pump backup. There are a lot of those small little discounts, but I'd say the number one key to saving money overall is going to be that customizing your insurance policy. So when people try to save money themselves by making adjustments online, it's a super dangerous game. You can get left very exposed where you might remove this coverage that doesn't sound super important to you, and you take it off of your car insurance policy, and then you get really left exposed and having to pay thousands of dollars out of pocket. So having that consultant, I really try to take on a consultative role with my clients to stop you falling into those pitfalls, like
Uh,
raising your deductible super high or leaving
mm,
off uninsured, underinsured motorist coverage on your auto policy. And pardon the insurance jargon again, but I had a client, who came to me after he had a huge claim, and he said he was trying to save some money by himself, took off this coverage, underinsured, uninsured motorist, and he had to pay, I think it was like $14,000 for a crash, out of pocket because it was a hit and run. So the cops never found the guy who ran away. It's hard to get paid from insurance if you never find the guy. So what that coverage does, underinsured, uninsured motorist, is when the other person doesn't have insurance or it's a hit and run, your insurance policy can act on your own property. So without that coverage, this guy who's kind of a friend actually, so it was really really tough to see. I said you should have called me before this happened, but he had to pay out a ton of money.
Oh, wow. What a huge loss. 14,000 is not a
No,
small
yeah.
chunk of change? Ooh. So we've heard it for years, bundling, auto and home. Is that still worth it, or is it just marketing fluff that insurance companies throw at us?
Yeah, that is the number one marketing thing that these companies have hit with their $1 billion marketing budgets. When sometimes people say, what can we do? On the phone, they'll always say, "Can we bundle?" It's the marketing works in that sense, but I think it is. It is the most significant discount that insurance companies offer. What I would say is that it's not always going to be the right fit. Let's say, each insurance company is going to have a different appetite for each different kind of risk. So
Mhm.
let's say insurance company A is offering you, $1,000 a year on your home insurance, and that's a fantastic price, but their auto insurance is $300 a month. Now, insurance company B is offering you, $3,000 a year on your home insurance, but $100 a year on your auto, or $100 a month on your auto. It's going to make way more sense to take the home insurance from insurance company A and the auto insurance from insurance company B and do an agency bundle. Those savings are going to offset the bundle discount that you would have got by hundreds or sometimes even thousands of dollars. So we call that an agency bundle, where we're taking two different insurance companies, the best price that we can get for each line of business, home or auto, and we're going to combine them to find that best insurance portfolio that we can find on the market.
That's a powerful takeaway, and whatever we can do to help our clients, right? So this information is very, very helpful for our audience. So I appreciate those pointers. Hey, Gus, I'm curious. I'm into data. I like numbers. I guess that's why I got into mortgages and real estate.
Mhm.
I wanted to ask you about 2024 versus 2025. What are you seeing the variance in pricing between these 2 years with home insurance? Has it increased? Has it decreased? What kind of percentage are you seeing between the 2 years?
Yeah, it has not decreased. It's never decreasing. No, so I'd say, over the last 5 years since we had that crazy inflation and labor costs in 2020, it's been going up every year. Maybe, averaging around 10% a year, overall. So, I've seen some stats like over the last 5 years, it's increased 50%. What we're seeing now is these companies are finally starting to figure it out. How can we be profitable without increasing our rates every year like crazy. So things are finally stabilizing. And that's not to say it's getting cheaper. It's to say we're seeing less crazy renewals, crazy high renewals. From 2022 to 2023, you often had cases where someone's insurance is going up like 50%, some crazy increases like that. What we're looking for is like a 1 to 5% increase every year. It's going to usually increase every year. If you have a insurance premium that stays exactly the same from one year to the next, that's a huge win. So if we see a renewal under 5%, that's typical, no problem with that. But if it goes up 15, 20, 25%, that's when you'd look to reshop it and say, is there another insurance carrier out here who's going to have a better price? So that's, something I do with my clients is, when they
Yeah.
get the renewal, it'll come into my inbox and say it's increasing at 7%. So I'll, shoot them an email and say, this looks like it might just be the best price on the market right now. So I think you should stay put. Other times we're going to shop it. So like every 2 to 3 years, that's usually when a lot of people are switching, every 2 to 3 years.
I see what you mean. And, I think this information is helpful even for me, learning about the industry from your perspective and seeing what are common trends, what seems to be, on the rise or decline. Doesn't sound like there's decline, but stabilizing is good. That's not a bad thing. That's actually pretty good. From a lending perspective, overall, people get so fixated on the mortgage interest rate. But, I like to also guide my clients, it's what people feel comfortable paying, right? What they make, right? And what they pay each month and what they can qualify. But pulling in the insurance premium, that's also part of, the overall payment each month, right? We've got the principal, the interest, taxes, and insurance. So insurance is a key factor, and that's why I wanted to bring you on to kind of share that information because it makes a difference each month, right? What people are
Mhm.
paying and what they're paying for, right? Sometimes cheapest is not always the best, right? And
Mhm.
this is something where, how you've shared some nuggets about, tips on, what to put in the policy, what to look for. These are some key points that individuals need experts like yourself to talk about it, to, educate and show people what they can do to, take care of their asset, right? A home is one of their largest assets in their life, and insurance is a very direct relationship with that. So, thanks so much for sharing that info.
Yeah, happy to be here. Just glad you were able to stay awake because I know insurance is super boring sometimes. So I say I try to make it fun. It's impossible, but really just it's super important to have those quick 5-minute, 15-minute conversations, make sure you're covered. I'm always going to try to save my clients money, of course, but how can we do that while still maintaining great coverage? That's the name of the game for me. That's the name of the game for any good insurance broker.
And for anyone watching, if you need any mortgage advice, home insurance guidance, answering questions, anything related to real estate, click the bio and reach out. And, either myself or Gus can, respond to what you're needing. And make sure to like, subscribe, drop a comment with topics that you're interested in. This has been the Real Estate Social Club, where we connect you to real life people that are experts in the field. And thank you so much for your time, Gus. Appreciate it.
Thanks, Tracy. Great to see you.